since this data, some of the pressures on them and some of the pressures on our supply chains have grown. And that's been a consequence of rising interest rates, deteriorating global situation, and of course, high and rising inflation, which is primarily but not exclusively global and has some domestic elements to it as well, as the Reserve Bank talked about yesterday. The headline figures in today's national accounts are encouraging, but the details do confirm the pressures that are being felt by Australians and the pressures that are being felt in our supply chains in particular. Real GDP increased by 0.9% for the June quarter, and it was 3.6% higher over the year to June. This solid growth is welcome, and it's broadly in line with our expectations. But the drivers of this growth were still narrowly based. It was supported by some temporary factors, and a lot has happened since the end of June. The big contributors to this growth were household spending and exports. Consumption increased by 2.2%, contributing 1.1 percentage points to real GDP growth. And a big part of this story is the fact that people felt increasingly willing to spend on discretionary services in particular as we came out of that phase of the pandemic. And at the same time, as we've seen that growth in consumption, we've seen a pretty sharp decline in the household savings ratio, which fell from just over 11% in March to 8.7% in the June quarter. And what this shows is that while households on average are still saving, they're saving less. And we also know that they're impacted by the rising cost of living and the fact that their real wages are falling as a consequence of that. Net exports contributed 1 percentage point to real GDP this quarter as exports recovered and imports slowed. Mining and agriculture picked up because those severe weather conditions passed, and also because they were able to respond to the really strong global demand for energy following those pretty extreme disruptions to Russian gas supplies to Europe. So there are some encouraging aspects of these results, but we can't pretend away or paper over the real and growing challenges in the economy that the national accounts also make clear. A weak investment in dwelling and engineering construction shows the impact of skills shortages and capacity constraints in our economy. Dwelling investment fell by 2.9% in the June quarter to be 4.6% lower over the year. This was a bit weaker than people expected, given we've got that large pipeline of work in the sector, but it does reflect the fact that we've got quite acute labour and supply chain pressures, and that the sector is under considerable financial strain from high inflation in input costs.